And so that's your scorecard for this morning as we get up and running for trade. Let's get to Kevin Green, who joins me now. We've seen the VIX spiking. We're at 21 right now. And actually, I'd just like to mention that I got a note out just momentarily from John Kosa, a good friend of our network as well, who obviously has the Asprey 6, saying the US stock market's internal health is flashing negative signs across all 6 metrics now. What do you make of the action we're seeing, KG, out there?
Yeah, obviously we have seen a little bit of pressure to the downside for the S&P 500 to start off, but we are off the lows so far. Now, what I am kind of noticing is market breadth is actually weakening as we are getting a little bit of a bid, and that's because we are starting to see a rotation back into those Mag 7 names. If you look at Apple, it was actually in the green, now it's turning a little bit into the red. Nvidia also was in the green as well, so you are seeing that maybe that concentration trade starting to take effect here, but we still have a long way to go in order to try to recapture some of these losses. Obviously, over the last couple of days, especially when you're looking at overnight trading, there has been concern about liquidity in the market just overall. We have seen that kind of coming out of the market that could create a little bit of volatility, which leads the VIX to move to the upside here. You also have the credit default swaps and a lot of the concerns around the AI trade, maybe the valuations taking a toll here to the downside for a lot of these tech names. And then Bitcoin, it lost 100,000 level. Obviously, that's a liquidity gauge, especially when you're looking at the tech stocks as well. And you are starting to see, obviously, equities kind of moving a little bit lower. But this is a key area of support for the S&P 500. Let's see if we're going to be able to hold this. We have seen us bounce off of these levels over the last couple of weeks or so. Are we going to do the same, or are we going to flush to the downside? From the market breadth standpoint, it seems like we are relying on a select few of names in order to try to get us out of this hole here today, which is not that great, but maybe we do see this broadening out going into the close as we head into the weekend. I'm not sure how that's going to really end up so far right now, but that is something to be mindful of. Microsoft actually just turned into the green right now as well. So once again, a little bit concentrated, maybe some buy the dip mentality taking place, and it seems like that's been the trend over the last couple of months, and maybe this one is not going to be any different here when it comes to this pullback.
Okay, so perhaps some dip buying going on this morning. I mean, Ives was out with a note certainly suggesting that tech could be an opportunity there as far as the sell-off we've seen in that sector. But as you mentioned, we are seeing pretty much all the sectors in the red this morning, all but utilities, which is just hanging on there just above the line to the upside at the moment. But what you're saying as far as coming off the lows, perhaps speaking to why we've seen the 10-year actually picking up right now. We're at 4.11. Let's talk about some of the headlines that we're tracking this morning as well, KG. The Trump administration preparing potential tariff exemptions on things like coffee from certain trading partners to address some of the affordability issues. Talk us through what the significance of that is and what it could mean for markets.
Yeah, we are seeing maybe a little bit of an easing when it comes to a lot of these tariffs, especially for the products that we are unable to produce here in the United States. As you kind of talked about, there is some chatter here, especially U.S. Trade Representative Greer talking about potentially easing or providing some exemptions for tariffs for certain countries around products like coffee, cocoa, as well as bananas. Now, this could also expand out to the beef trade as well with Argentina. That has been a sticking point for the administration over the last couple of weeks. And I think that gives you a little bit of a sign here that maybe some of the pricing pressures, some of the inflationary pressures, especially after the election that we saw, might be actually impacting the administration, and we might see a little bit of a reversal. Now, obviously, these are very small wins, but any type of win that you can get on the tariff front could actually be a positive for a lot of these markets, especially when you're looking at the staples companies, the companies like Walmart, Target, those that actually do import these goods, these groceries, if you will. This could actually alleviate some of that pain. And hopefully, the hope is that this is also going to transfer over to the consumers as well, bringing those prices down, hopefully inflation coming in a little bit lower. That would also give the Fed a little bit more confidence that they could cut rates here. Now, obviously, this is going to be a near-term solution. Let's see what the final solution is going to be when it comes to the tariffs overall. We still have the Supreme Court case that's being heard right now. And it does appear that we actually did announce a reduction in tariffs on Switzerland as well. That's something that has been going back and forth over the last couple of months or so. But it seems like there is a resolution there where we are bringing those tariffs down to that 15% minimum benchmark here. So some optimism on the trade front here. Not the major headline for today, but something to keep an eye on.
Okay, and something else we're keeping an eye on is this spike in crude prices this morning off the back of some geopolitical tensions we're seeing over between Ukraine and Russia. What are you seeing there as some of the supply impact here?
Yeah, we are seeing crude oil move to the upside about 2% in today's trading here. So we actually had two news items overnight that impacted the energy market as a whole. The first one is the Ukraine strike on Russian assets on the Black Sea. There's a port there, a major port when it comes to oil exports that was actually hit last night. Now this port actually impacts around 2.2 million barrels per day when it comes to exports. If you have the equivalent, it's around 2% of the global market supply here. So that's why we are seeing that move to the upside. There was also a pipeline that was impacted as well. They did temporarily shut down that pipeline. There is talks right now that they are going to reopen that pipeline. So that's probably why we saw a little bit of a give back for the advances here. And then we also have this news item that Iran actually did seize a tanker. Now this tanker was carrying basically tanker fuel, if you will. And this is actually something that has not happened in a fairly long time. And maybe this is just a one-off type of situation, but if this is something that actually does create a trend, do we actually start seeing the logistics lines starting to be impacted? And do we actually start seeing a spike in tanker rates, which could actually push prices higher as well? We know the global supply front is still in a glut for the most part. If you're looking at the physical inventory around the globe, and the demand side has been a little bit lackluster. But that's the reason why we are seeing this pop to the upside. Once again, these supply shocks have been short-lived. Maybe they last a week or 2 weeks when it comes to the price advances before the market really starts to price that in, and then we continue to move lower here. Nothing on the demand front has really changed over the last couple of days.
Okay, let's just switch gears to what we're seeing as far as gold. Could you sort of talk us through what we're seeing as far as the price action there? It's coming off quite a bit. It looked like a couple of days ago we were sort of back in arm's length of those record highs, but it seems like it's taking a bit of a breather now, just above that key 4,000 level right now.
Yeah, so the gold trade, the silver trade has still been looked at as a risk-on type of trade in some respects, especially for retail traders. And this morning, as well as yesterday, kind of going into the close, gold and silver dropped dramatically going into the COMEX close yesterday. And you did see a follow-through day today. This just looks like more liquidation taking place. We talked about the lack of liquidity in the market and the fact that a lot of traders and investors are looking to raise capital. And that's also happening in the gold market, in the silver market as well. That pullback to the downside, we have hit an area of support at that 4,050-ish area. Let's see how we actually resolve this. Once again, kind of going back to the Swiss announcement when it comes to tariffs, gold is actually a part of that. And it seems like a part of that deal requires that the U.S. actually has one main smelter here in the United States in the gold market. Moving those tariffs to the downside could actually reverse a lot of the price action for gold to the upside, because the higher the tariffs, the higher the prices for gold and a lot of these precious metals. So that's another reason from a fundamental standpoint that we were seeing gold actually reverse here a tad bit. But I think it's more looking for capital, looking to raise some cash, rather than maybe some of the other macro factors that have been in place here over the last couple of months.
Yeah, and as we mentioned, also an interesting move in crypto with Bitcoin sub 95 today. It's picked up now, but it's important to highlight Michael Saylor, who's been telling us here at Schwab, looking at 150 by the end of the year. I mean, he's coming out today saying we are buying. So we're going to be watching what he has to say on Monday when he has a further announcement on that. Thanks so much for that, KG.